Good morning, all. This is Dr. J at 11, coming to you live from Manhattan, New York, where the weather is crisp, nice and cold today, but not as cold as it was on Wall Street yesterday. Yesterday was a disaster. There's no other way to characterize it but a disaster. I did expect a sell-off. I did expect a pullback, but a gradual one. And I kind of thought that the sell-off might only be for 800 to 1,000 points. And now I'm thinking it's going to be deeper than that. But as long as the lows of October 29th and November 23rd, Friday, Thanksgiving, are not taken out, I feel confident that this is just another blip and we will continue on to new highs. I know it's hard to imagine in the face of a day like yesterday, but I still have good faith that this is just a pullback, an Elliott Wave 2 pullback, which feels like the real thing. So in my looking at the Dow, I see an ABC correction to 1029 that took us to the lows of, what was it, 24,225, 222, something like that. And then a one wave up that took us to heights above 26,000, maybe 26.2. So it's like a 2,000 point gain in something like 10 trading sessions, followed by a wave two, followed by another down, actually followed by a wave 2 down. I'm getting confused with my waves because I don't have my charts, but it was another pullback. Let's see, that would be, what we experienced that ended on Friday, November 23rd, in my opinion, was a wave 2 down. We had the beginning of a wave 3 up rally until yesterday, when we started a wave 2 down of a wave 3 up, I think. Now, of course, without the charts to show you, it's a little hard to follow. Nevertheless, there's two ways of interpreting the Dow Jones wave structure. One way is the way I just kind of outlined, which is bullish. I know it's hard to believe that we could still turn it around and take out the old highs, but I believe it. So despite the uncertainty with China, despite the trade talks and the so-called ceasefire or truce in the trade wars, that cast some doubt on Wall Street, I think, because nothing was shown in writing, and Chinese president, or whatever his title is, XI, is denying any concessions. So Wall Street has its doubts as to the veracity of the 90-day truce. I don't have any doubts. I think that an agreement was made because it's beneficial to both countries. Whether or not it's made public for various reasons, I could understand why it isn't. So you got to have a little faith in your government. You got to have a little faith in sometimes that they're telling the truth. Not everything is a lie. So I believe that there is a truce. Whether or not it will ultimately become permanent, I'm not sure. I think it will. So I'm not that worried about the trade wars. I think they're highly exaggerated. Now, what about the inverted yield curve? Well, all we had was an inversion between the 2 and the 5 and the 3 and the 5. To me, that's not a big deal unless the 10-year is involved. So a 210 inversion is more significant. I believe it's something like 7 out of the last 9 recessions have had an inverted yield curve between the 2 and the 10-year. So the odds favor, if it's kind of like a necessary condition, but it's not a sufficient condition, if you know what I mean. In other words, just having an inverted curve between the 2 and the 10 doesn't imply a recession. I think it's something like 12 out of 6. I know that sounds strange, but I think 12 of the last inversions, out of 12 of them, 6 of them actually became recessions. So it's really like an even money shot. It's only after the fact, when we've had the recession, we look back and say, oh yeah, we've had an inverted yield curve. So Dr. J is not that concerned about that. Am I concerned about the Fed raising? No. I think the economy is strong enough. I think inflation is a threat down the road. So them raising, the Powell raising in December is a given. I think it's a good thing. Also, when you raise the Fed funds rate, it gives you ammunition, should you enter a recession, to start lowering it. So therefore, I know it sounds a little strange, raise it in case we need it, but raising it could cause a recession. Well, it could if it's done too quickly and the economy can't handle it. But I think the Fed is going at a very measured pace. They're responsive to the data. So if the data shows that the GDP is strong, et cetera, that full employment, et cetera, hints of inflation, the Fed will raise. So I'm not worried about the Federal Reserve. So what am I worried about? I ain't worried about a doggone thing. I think we're going to have a bull market until we don't. And bull markets tend to run their course like anything else. I think we will take out the old highs of 27,000 in the Dow, and I think we will not stop this bull market until the Dow breaks 30,000. I could be wrong, and we'll know shortly if I'm wrong, because if the 1029 low on the Dow is taken out, then Dr. J has the prerogative to change his mind. I don't think that's going to happen, but it could. All right, look, I mean, without the charts, there's really no point in my continuing. Of course, do your own due diligence. My opinions are strictly my own. I mean strictly my own. I don't think too many are agreeing with me lately. In fact, the Elliott Wave gurus, Procter and Company, are calling this latest action in the waves to be a flat correction, and now they say that we're entering a wave 3 down. I don't think so. I mean, they're the gurus, so maybe they're right, but I don't think so. Anyway, do your own due diligence. My opinions are strictly my own and do not constitute investment advice. Please subscribe to this channel. I will be doing a course in charting, from the ABCs of it. So beginning with candlesticks on. So if you know nothing, it's a perfect course. If you know something, it's a perfect course. If you know more than me, then it's not a perfect course. All right, so this has been Dr. J, streaming live from Manhattan, New York. Hope to see you when I return home tomorrow. I might start this course at any time, so please make sure you subscribe to the channel so you can get notified of the course, and you could be one of the lucky ones that take it live and in person as I give it. I'm using Google Hangouts on the air. I know there's a limit as to how many can be on live with me. So first come, first serve. Adios, amigos. Sayonara. Happy trading. When trading resumes tomorrow, I'll be there with you. I'll be supporting you. You support me. Thanks for all the tips you give me. There are some people that are very smart that follow me, and I respect them a whole bunch. Adios, amigos. Sayonara, shalom, ciao.